Good morning, Jags. This is Fahad. Today is Tuesday, December 8th. Let's get started. So, last week in webinar on Thursday, we recommended first time in a long time buying call options in BIDU. Here's the actual snapshot that came from the webinar. First time after a long time turning bullish on this stock, BIDU went through 2 years of downward pressure because the company deviated from its core internet search business and started heavily spending capex on side businesses such as electric buses, cloud, AI, etc. These investments after 2 years are finally starting to pay off, as evident by last earnings report. Meanwhile, the core research growth in China is now starting to inflect positively beginning from Q4 and growing by as much as 10% year over year from deep negative declines that we saw in the early part of 2020. And we are also starting to see commentaries tell us that the advertisers are returning back to the platform, including in healthcare, education, auto, life cycle, software, and then continuous strength in e-commerce. So therefore, as a result of all of this, we said, let's go buy call options in BIDU January 145 calls for $6.45. I bring this up. This was on Thursday at 1 o'clock last week. Now, since then, a bunch of new news are coming out. And if you look at pre-market, you will see the stock is spiking a little bit. It's going to open higher by about 2 to 3%. It closed around 144.30 yesterday, and it's going to open at 148. Go back to the daily scale. What does 148 means? If you look at these VOP lines, the resistance has been around 146. So it's going to take out this resistance. It's already taking out this resistance in pre-market. It's going to open around 148 and will likely start to tag 150 soon and could potentially have a big day today. Now, the news today that's out is that the company is increasing its share buyback program from 3 billion to 4.5 billion. So it's increasing that by 50%. And that's naturally positive. However, you also have to keep in mind that from our discussion, since our discussion and webinar last week on Thursday, up until this morning, there have been multiple other news events that are also playing positively for BIDU. So let's cover those one by one real quick. First of all, keep in mind that there was a web summit, Web Summit 2020 that took place in China on December 3rd. That was last week, our nighttime, Thursday and Friday morning in China, Web Summit 2022. In this summit, the executive vice president of Baidu, Duo Shen, presented its strategy for mobile ecosystem. And it was very, very positive. Here's a big press release that came out regarding this. This ecosystem is basically getting into significant, fast-growing portions of the what they call intelligent economy that China is building over the course of next 10 years. Baidu has launched 3 programs or 3 product categories, 3 services, all for this intelligent economy. Most of it is centered around 2 things. One, which is the development of AI technology to be brought forward into all kinds of a spectrum, including the changes that they're making to devices and how the users will interact with them, and how the AI-powered devices will be coming out in all kinds of gadgets and electronics in the future. And they continue to basically push the envelope of the industry to change its formats to adapt these intelligent transformations. And the second thing has to do with the electric cars as well as autonomous driving vehicles. So based on these 2 industry leading technologies, AI and autonomous driving, there was a big press conference. There's a whole presentation about this on the internet, multiple slides available and all this. And Duo Shen spent half hour on the summit last week on Friday talking about how Baidu is positioning itself to benefit from all these mega structural trends. The important thing is that this is exactly what you need to keep in mind. Don't look at Baidu from this point on as just another company like the Google of America providing the internet search results. It has been transforming itself for the last 3 years as to get out of just providing core search on the internet, but to get into all of these side businesses where they have made significant amount of capex investments over the past 3 years. And now they're in the position to benefit from these robust mega trends that are starting to emerge all around us. I won't go into further detail as to what this presser was last week, but it's quite positive because it's telling us about the direction of the company. Then the second thing happened, and this news came out yesterday. BIDU is the first company that has now been approved for fully driverless road tests in Beijing. This came out last night while we were sleeping. BIDU is the first company. The company plans to remove safety drivers from test vehicles after gradually reducing human intervention. And a remote safety operator will still be able to take control in the emergency situation using 5G remote, BIDU's 5G remote driving service. And Beijing has very, very strict requirements for driverless road tests. Think about, for example, if this was happening in New York City or another populated city, how they would be strict requirement as for doing these driverless road tests. And this company press release came out yesterday on this one, and this company was BIDU received the approval after completing 30,000 kilometers of safe test driving to open roads, one of the prerequisites to conduct road tests on public streets. And as a result, they expect that within the next couple months, they'll be able to demonstrate that it's safe to drive these driverless cars or autonomous cars. And as a result, they may actually get an okay for this sometime in 2021 to start launching this product. Okay, this is what the actual car looks like. This would be a significant change considering we are seeing a significant recovery in the cyclical recovery in the auto cycle in China, and we have seen a lot of companies that have been benefiting from it, including NIO, Li Automotive, and Tesla, and many others. And then one last catalyst that you also need to keep in mind is that there is still a potential for a sale of IQ, symbol IQ, or IQE, that's how you say the name, IQE, but symbol IQ. This has a market capitalization of about $16 billion, and it's majority owned by BIDU. And the company is planning to sell the entire remaining portion that they still own of IQ to Tencent and Alibaba. Back on November 27th, Reuters ran an article saying that this potential deal was put on hold after regulatory and price concerns. Alibaba wants a lot of money for this. BIDU wants a lot of money for this, but Alibaba and Tencent are not willing to pay a lot of money for this. Plus, there were regulatory concerns. Remember that whole Ant Financial debacle that happened when Jack Ma starts running his mouth against the government there, he gets in trouble. And so those could also be the reason, because he has become too powerful. Jack Ma, that is, he has just become too powerful in China, and Chinese do not like it. The authorities don't like that. But anyway, this deal is still potentially could happen sometime pretty soon. BIDU owns 56% stake in IQ, so it's a very, very large stake. And if the deal happens around 20 billion, we are looking at about 24% upside to Baidu's current stake of $9 billion. So that means that stake on the balance sheet alone will get revalued by at least another $2 billion to the upside. And that in itself is positive also for Baidu if that deal happens sometime in 2021. So now purely taking a look at this technically, so this is breaking out in pre-market. Here's another short-term technical look. You're going to see this thing clear through all of this. It's already trading at 148, I should say, in pre-market, with the resistance around 146. And if you look at the long-term scale, and this is the picture that I meant to show as more focused picture, in the webinar last week, where take a look at this long-term trend. The stock has been decimated so much from 2018, has come down, found a rounding bottom. If it starts to clear this 145 to 150 range, There's a setup here for on a weekly scale for rally all the way up to 165. It's going to face some resistance there. If it clears that, then who knows, it could be going all the way back to 200 plus over time. And that could very well happen in 2021. So keep an eye on BIDU. It's an emerging tech in China that has been a forgotten name. Not many people talk about this anymore, but the news flow continues to improve. And by the way, one last thing that I will also mention, here is the Jaguar scan on BIDU. Take a look at this. If I zoom into all of this, this is all the data in front of you is since August to up until now. You can see December 7th over here. BIDU has seen consistently bullish accumulation, more so now than any time in the past. 78% bullish bias. Some heavy bullish action is recorded in the January 2021 month. If you go back to November 27th, okay, this is the time when that IQ news came out. There was a lot of call accumulation in various strike in the January 150, 155, 160 strike calls. But overall, for several months now, it has been consistently bullish. You can dive into either of those, any of those flows by simply right-click on those charts, and you can drill down to exact lot level in Jaguar scan. So a lot of positioning in the January month at the 150, 155, and 160 strike calls. That's it from me. Jay.
Morning, everyone. So 3 items to quickly talk about today. Number 1, I have a new behind the numbers post going up on the homepage later this morning. And it's going to be covering a company called Astronova. Ticker is ALOT. They refer to themselves as a data visualization company. It has exposure to the aerospace market, where it is a supplier of airborne printers. So these products print weather and airport maps, communications, other critical flight information. Company reported earnings yesterday. It was still affected by the 737 MAX grounding. However, it did win a couple of new orders from a North American carrier, as well as US and foreign military facilities. And then finally, back in 2017, it signed a deal with Honeywell, and based on management commentary, it sounds like a new deal is expected to be finalized this quarter. So keep an eye out for that right up.
Honeywell, it's a small company signed a deal with Honeywell. How big is that deal? Is this significant?
I know there was a press release. Let me go back and get that exact number, and I'll put it in the write-up.
Sounds good. Looking forward to your write-up.
Topic number 2 is Moelis, ticker MC. We just talked about this name last Thursday. Well, after the close yesterday, the company announced a special dividend of $2 per share. KBW was out with a note last night saying that they did not have a special dividend announcement incorporated into their forecast, nor does the consensus estimate. They go on to add that just like the sharp M&A upswing caught most investors off guard, MC's sizable special dividend announcement this evening came as a surprise to us. Keep in mind that CEO Ken Moelis is presenting today at the Goldman Sachs Financial Services Conference, where KBW expects him to strike a bullish tone about the state of the M&A environment.
This was an excellent entry on your part, Jay, because you brought this up here. For those who missed it last week on Thursday, on December 3rd, in the conversations, this is where we discussed first time the bull case for the investment banking firm Moelis, whatever, MC, with a very nice technical breakout with the rising M&A deal making and SPACs coming as all potential catalysts. And now we have this December 8th conference that's also taking place. So this was right here, just as it was starting to break out. Stock is a run up straight since then by about 6%. And it looks like now with the special dividend announcement of last week, this thing is going to push higher again. So just in a matter of days, this will be up like 10% since that discussion last week. So good stuff.
And then finally, topic number 3 is covering Domino's Pizza and Papa John's. Now, technically speaking, these stocks have not done anything as of late. No question about that. But Stevens, in a note yesterday, is arguing that a renewed acceleration is taking place in the category, and that is not factored into consensus yet. They point out that in fiscal Q3, pizza did a 24% comp in North America. Consensus expects 14% in Q4. Meanwhile, for Domino's, they posted a 17% US comp in Q3, and consensus expects 12% in Q4. They believe these assumptions are too conservative, and they are pointing to recent Apptopia data, which essentially shows, for Domino's as an example, you saw an acceleration during the peak of COVID, but then a slight deceleration month over month. But now, since October, you've seen an uptick month over month. Papa John's really never decelerated, but it wasn't growing exponentially, but now you have seen an uptick in the month of November. So like I said, technically speaking, it needs to be a bit more constructive to get excited about these names, but we now have some Apptopia data to hopefully give this a boost in the near term.
I don't have a position in Domino's Pizza, but I have continued to hold a common stock position in Papa John's ever since we made that a topic last year. So it's been more than a year I've been holding on to that position. It's done quite well. It's not any of those hot Momo stocks, but even with the recent pullback with the basing formation, I think this is a setup from here. It can start to lift off again. But I have to say, when you start to see the total amount of daily active users for this for its key apps on your mobile phones take off in new leg higher like this in the October and November, it's partially due to the new lockdowns that are coming around the country. But net, this has to be positive. More people downloading the app, more people, that means using the app, means more people, placing the orders from these apps. And meanwhile, the consensus has basically come down from what used to be mid-20s percentage growth for the same store sales growth down to now mid-teens or even low teens. So there's definitely a setup here for a surprise to the upside. And PZZA, this is the name that I continue to own, and take a look at this rounding bottoming formation. It has been building this base for quite some time. I still think this thing is going to make another run towards $100 plus. So I like this update. Thank you. Chronicle.
Good morning. Fahad, I remember last week you talked about Cirrus Logic, symbol CRUS, as a higher beta derivative play on Apple. Today, I have a note from KeyBank basically lending support to that view after their meeting with management. To summarize what they found, basically closed loop controllers have been driving content gains in the iPhone 12 because each of the 4 SKUs have multiple cameras, and they're currently being used to support optical image stabilization and autofocus. And the important thing is that 3 out of every 4 of these SKUs will have at least one closed loop controller, which is a positive read for Cirrus. And then meanwhile, on the power conversion side of things, Cirrus's power conversion integrated circuits could see a potential for increased volume due to boosted amplifier and power requirements related to the speakers in the iPhone, according to management. Now, KeyBank is saying here in this note, and this is potentially going under the radar, is that Cirrus's power conversion solution is likely to be used to optimize battery performance, and when the iPhone speaker is being driven at peak levels in order to prevent unintentional voltage drops. And this leads them to believe the potential for increased volume could be even higher than the demand for closed loop controllers. So this could be a hidden upside catalyst to look out for. And then lastly, this was something that wasn't mentioned in last week's conversation, but there is also upside opportunity here from the Android side of the business. So because of the Huawei ban, as well as Samsung's Exynos audio codec integration into their flagship phones, because of these 2 factors, Cirrus's Android revenue has dropped roughly 40% year over year. But going forward, management told KeyBank that there is opportunity for Android revenues to recover if some of that Huawei share manages to shift to other Chinese consumers that have been aggressively ramping their design activity, particularly Xiaomi. So putting everything together, there's opportunity here for continued growth in closed loop controllers for next generation iPhones. That's number one. There's potential here for power conversion ICs to begin to have greater value than closed loop. That's point number two. And finally, we have potential for some of the Huawei related revenues that were lost to be regained from other Chinese competitors that are growing just as quickly as Huawei, if not quicker, because the US ban doesn't apply to them. Like, there's this misconception that China's phone market is just Huawei, when in reality, there are three other major players that together make up just under 50% of total smartphone sales versus Huawei at 35.
Couple thoughts on this one real quick. So the first thing is that if you're talking about Cirrus Logic getting more content per Apple unit being sold of the iPhone, that would be very, very positive because of the controllers on the voice side that you just mentioned, because I don't think that would be in anyone's consensus. I think most of the estimates that are out there on the street, when we look at them, most, because considering company gets somewhere between 82 to 86% of its revenues from iPhone, they simply base off the total sales expectation off of what the volume sales will be of the iPhone. But I think that the street remains a bit vague about as to how much content per unit will the company get. So if they're talking about more content per unit, that will be very, very positive over the long term. And just a reminder to everybody, once again, this was last week. Also on December 1st in conversation when I presented a bull case for Apple, and this is where I also discussed the case for Cirrus Logic, making a case that this is likely going to $100 per share, and the stock closed at 83 yesterday. It gradually continues to march higher. That's the first thing. And second thing is that if this company starts to see more traction with the Android devices, whether Xiaomi or it's Samsung and whatnot, that would also be very positive from a multiple expansion standpoint, because the problem with Cirrus Logic is having so much reliance on Apple has always kept its earnings multiple depressed, because nobody likes to own a company that is so dependent on a single customer. But if they start to shift away from that, that will be hugely positive for multiple expansion for Cirrus Logic, and then maybe even my $100 per share will look very conservative in the long term. Here's a beautiful long-term weekly scale. You can see after a year long of sideways chop fest, it's starting to emerge from that. Let's see how high this could fly over a good year or two from now. Good stuff. Thanks, Chronicle. All right, folks, we're going to stop over here. Thank you very much, and we'll see you in the chat room shortly.